The strategy of the smart money concept, SMC, using Lux algo indicators along with Fibonacci levels, often referred to as the fiber, and how to identify the range with the highest volume of transactions. Smart money concept strategy with Lux algo and Fibonacci fiber. The smart money concept, SMC, is a trading approach that follows institutional activity, tracking where smart money, banks, hedge funds, etc., is accumulating or distributing positions. When used with the Lux algo suite of tools, SMC becomes even more powerful by providing visual confirmation of key market structures like liquidity grabs, order blocks, and market structure shifts, MSS. Key components of the strategy: 1. Market structure shift, MSS. Lux algo highlights breaks in structure, helping identify trend reversals or continuations. Second order blocks. These are institutional zones where price is likely to react. Lux algo marks these automatically. 3. Liquidity zones. These are areas where stop hunts and fake outs happen, traps set by smart money to take out retail positions. 4th, Fibonacci retracement, fiber. Add this to measure potential pullback levels. Key confluence comes when fib levels align with order blocks or liquidity zones. Identifying the range with the highest volume of transactions. To determine the range with the highest transaction volume, use the Lux algo volume profile, if available, or another volume profile tool. This shows where the most trading activity has occurred, commonly referred to as the high volume node, HVN. Here's how. Apply the volume profile range indicator over a defined time period, e.g. a session, week, or recent swing. Look for the point of control, POC. This is the price level with the highest volume. Mark the value area high, VAH, and value area low, VAL. This creates a zone, range, where 70% of volume was transacted. Thank you for watching the video so far. The rest of the topics are much more important than the previous ones. Be sure to watch. With tools like Lux Algo Premium, traders gain a clearer view of these footprints through automated highlights, volume analysis, and predictive modeling. Core principles of the strategy: 2. Liquidity zones and sweeps. Smart money often hunts for liquidity above recent highs or below recent lows. Look for sweeps, fake breakouts, where price quickly reverses after taking out liquidity. Lux Algo displays these zones, helping you anticipate and not get trapped like most retail traders. Identifying the range with the highest volume of transactions. This is one of the most powerful parts of the strategy. Knowing where the highest volume occurred shows you where institutions are most active. This is the battle zone between buyers and sellers. Using the volume profile range VPR tool: 1. Apply VPR to a relevant swing or session. On TradingView, use fixed range volume profile and drag it across the desired range, e.g. London session, NY session, or a recent consolidation. 2. Key volume profile areas, point of control, POC, the single price level with the highest volume, value area high, VAH, and value area low, VAL, range where 70% of volume was transacted. This forms your high volume transaction range. 3. Trade from the POC or edges. When price revisits the POC with confluence, OB plus fib, expect a strong reaction. If price is at the VAL or VAH, look for either a breakout or rejection depending on structure. Or combine with Lux Algo's smart money insights. If Lux Algo shows a buy-side liquidity sweep near the VAL and price reacts at a 0.618 fib, it's a high probability long. If there's a bearish OB near the VAH plus bearish MSS, it's a strong sell signal. Thank you for watching the entire video. There are many strategies to learn, so stay tuned.